Hello everyone, this is chapter 1, problems. There are 4 questions and I'm going to go over some of them that I think could be potentially, challenging. So the first question is very straightforward, number 1. Number 2, it's kind of easy to understand. So the answers are very detailed, so we're not going to go over it. Let's go over question number 2. Okay, let's get started. During a year of operation, so I'm going to put the draw. During a year of operation, a firm collects $1.2 million in revenue and spends $865,000 on raw materials, labor expense, utilities, and rent. So these are the costs that involve spending money. These are what we call explicit costs. Okay, this is the total revenue or revenue. Okay, and owners of the firm have provided $250,000 of their own money to the firm instead of investing the money, earning 9.5% annual rate of return. Treat the income tax as explicit cost of doing business. So now we are looking at this cost. So $250,000, right, their own money, times they could have earned 9.5% interest on this money. Okay, so this is the money they're giving up by investing in their business. So if you use a calculator, I'm doing it right now, times 0.095, you're going to find this to be $23,750. This is what we call implicit cost. Okay, that's it. All right, so let's solve this question. The explicit cost of the firm are, this is very clear, $865,000. The implicit costs are, we found this, $23.75. So the total economic cost, I'm going to write it down here. Economic cost is equal to not only explicit cost but also plus implicit cost. So we're going to add these two, 865,000 plus 23,750. This is your total economic cost. Okay, next question. Firm earns economic profit. Economic profit is revenue, total revenue minus economic cost. Okay, so what's the total revenue? $1.2 million minus, what was my economic cost? We calculated here, 888,750. If you calculate this, you're going to find 311,250. Feel free to stop this video and do your calculation. The firm's accounting, what's the firm's accounting profit? Okay, that's easy. Accounting profit, so I'm going to go home draw. Let me open up some space here. Accounting profit is going to be the difference between accounting. We're going to use pi for profits, Greek letter pi. This is going to be total revenue minus, this is going to be only explicit cost. Okay, so it's going to be $1.2 million minus, what was my explicit cost? This $865,000, right? That is going to give you 335. So to answer the question, what's the economic profit of the firm if the annual interest rate is 15%, right? We're going to do $250,000 times 15%, 37,500. This is the implicit cost. Okay, I also have the explicit cost that didn't change. Explicit cost, which is $865,000 plus this, right? So this is going to be the new economic profit, right? New economic cost. So when you add implicit and explicit cost, you're going to find a new economic cost. Okay? So what you're going to do, add these two up, and you're going to do total revenue again, 1.2 million minus this new economic cost. That's it. Okay, so let's move on to the next question. Okay, so the next question is about present value calculations. Let's read the question. Over the next 3 years, a firm is expected to earn profits $60,000 in year 1. Profit 1, $60,000. Okay, profit 2 in year 2, it is $50,000. And in year 3, this firm makes $20,000. Okay? Alright, if the risk-adjusted discount rate is 6%, so risk-adjusted discount rate is 6% for each of the next 3 years, the value of the firm. So I'm going to do part A. Once I do part A, you can do part B. Really easy. Only the setup will change. So present value calculation is profit in the first period. Okay, so discounted at period 0, it's going to be 1 plus R. What is my R? 0.06 raised to the power 1. Okay, so I just discounted $60,000 to period 0. Second period, $50,000 of profits divided by 1 plus 0.06 raised to the power 2. Why? Because we're discounting this $50,000 from period 2 to 0. Okay, and the last period, $20,000 divided by 1 plus the interest rate raised to the power 3. If you calculate this whole stream of profits, you're going to get $117,896. I did this. This is correct. Okay, so this is the value of the firm, and the firm can be sold today at this price exactly. You sell the value of the you sell the firm at the value of the firm. And the same thing for part B. You, instead of 1 plus 0.06, you're going to do 1 plus 0.11. Okay, for all these values.